What's so special about retirement accounts? Today we're going to break down something that is crucial to understand in your 30s and the rest of your life. Things like 401ks, traditional IRAs, Roth IRAs. You can't really have a conversation about saving or investing in this season of life without a retirement account coming up. But what makes them so popular and why should you pay attention? We're going to break it down today. First, let's quickly define what these accounts are. We'll start with the 401k. This is a common type of retirement account where most people start their investing journey. A 401k is an employer-sponsored retirement account that allows you to contribute pre-tax income, reducing your taxable income right now. What's great about this is that any money you put into a traditional 401k plan at work actually reduces how much of your salary is taxable. Let's say, for example, you made $100,000 and you took $10,000 and you put it into your 401k at work. That means only $90,000 of your income is going to be taxed in the year you made the contribution. In addition to this, many employers actually offer matching contributions, which is essentially free money. Next up, we've got the IRA, or individual retirement account. An IRA is a retirement account you open on your own, so not through your employer. This offers tax advantages for your savings, just like a 401k. So if you were to contribute, say, $5,000 to an IRA, you will receive a tax deduction of that amount up to certain income limits. The IRS does phase this out for people who make significant amounts of money. So before contributing and expecting a deduction, check with your financial advisor or CPA to make sure you are in the clear. And then we have the Roth IRA. A Roth IRA is similar to a traditional IRA, but with one key difference. The contributions to a Roth IRA are in after-tax dollars, meaning you don't get a tax deduction when you put them in. But on the flip side, your withdrawals in retirement are tax-free. One important thing I want to point out is Roth also is increasing as an option within 401k plans. And they operate just the same way as Roth IRAs, just with higher contribution limits. So if we go back to that previous example where someone is making $100,000 and they contribute $10,000 to a Roth 401k, that doesn't actually reduce their taxable income. So they'll still be taxed at that full $100,000. But in retirement, any money that they take out of that account will not be taxed. So you probably knew some or most of that information already, but what makes retirement accounts the go-to investment accounts, especially for people in their 30s? Number one, and the most important reason, is the tax benefits. Now, most of the debates about these different types of retirement accounts come down to when you have to pay tax on it. So Roth IRAs provide a lot of value down the road in retirement because you don't have to pay taxes. But traditional IRAs and 401ks provide a lot of benefits right now because you don't have to pay tax on the money that goes in. But there's another benefit that all retirement accounts share, and that's tax-free growth. Now, in order to understand what makes tax-free growth so beneficial, you have to understand how investments are normally taxed. The three main ways that investments produce value and are therefore taxed on are dividend distributions, interest payments, and capital gains. Now let's say you had a standard taxable brokerage investment account with two main investments, a stock and a bond. You bought the stock for $1,000 and then sold it for $2,000. And during the same year, you received a total amount of dividends of $100. Now in this account, you'd have to pay tax on both the growth of the investments and the dividend payments of the stock. And on the other side, let's say you held a bond worth $1,000. It didn't change in value while you held it, but it did pay you interest of $50. You'd have to pay tax on that as well. Now here's the key point. If we replace the taxable brokerage investment account with a retirement account, let's say a Roth IRA, you wouldn't have to pay tax in any of these instances as long as the money and investments stay within the account. Perhaps you're beginning to understand what makes these accounts so powerful. Obviously, you get some great benefits from putting the money in or when you take it out, depending on the type of account. But the ability for these investments to grow tax-free for 10, 20, 30, maybe even 40 years makes them incredibly powerful. Now, if you don't know where to start with selecting investments in your 401k and your IRA, I understand, and you're not alone. As a financial planner, I help people in their 30s and 40s figure out where to invest their money in addition to a bunch of other things. And while I'm not going to be covering that today, you can go ahead and hit the subscribe button because future videos are definitely going to talk about investing. Thanks again for watching. Have a great week, and I'll see you next time.